Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Kind of rainy out here in South Florida right now, but I don't think the fish mind it too much. This is the live coral cam down in Miami, and it's hard to believe. It looks like an actual, I can't believe it's right out of the port of Miami because it looks like a living reef fish tank. You wouldn't think that there would be so much life down here, and these hard corals right here, very, very hard to grow in a polluted environment. So surprising they exist actually in this area. So let's take a look at what's going on today. First, yesterday on the video I was talking about maybe a possible layman moment in China. I'm sure everyone's talking about layman China. I'm sure it's people are kind of sick of hearing it today, but I was wondering when the markets went down. It was in overnight markets when we were all sleeping, East Coast, West Coast. The whole United States was pretty much sleeping when these markets were not sleeping, but it was late at night when these markets started going down. I was questioning whether they were on some thinly traded market or perhaps they were in the Asian markets, and I didn't know the time of the Asian markets. So here you go, just in case you didn't know either. The Chinese markets opened up yesterday at about the exact same time that silver, platinum, and palladium really got monkey hammered, or should I say, just took a big deep nosedive there real quick. And it was between 1 a.m. our time and 5 p.m. 5 a.m. our time, and apparently that kind of coincides with the Asian markets here. 1 o'clock GMT to 4:30 GMT, and again that's 1 a.m. to 4:30 or 5 a.m. in our time. And if you look at the chart, go back and look at the chart that I put up yesterday. I didn't think sorry, I should have put it up right here just to show you, but you'll see that the down in those metals coincides almost the exact same period that the Asian markets are open. So were they traded in thinly traded markets that nobody messes with? I don't think so. Could there have been monkey hammering along with this sell-off in China because of a potential Lehman moment? Very possible, and more than likely, like you said, any excuse to monkey hammer the metals more, you'll see the short sellers do that. Of course, that's how they make their money, and you'll see the manipulative players do the same thing as well. Let's move into, seems stable out there today. Let's move into spot prices. Before I go into spot prices, I got a little tidbit I'm going to give you about 90% constitutional silver and U.S. silver dollars. How to turn that into more silver than what you currently own. Won't cost you a dime out of your pocket. Maybe just a trip to your local coin store, your local bullion dealer. But I'm gonna give you a great tip right now on how to make some money here, how to increase the size of your silver pile. So hang out with me here while I finish this video. Let's take a look at metals markets right now. The coin, hang on a second, I got the coin in my hand. Let's do a coin flipping and see what the coin, I can arbitrarily just see what it says about this or that. This is just for fun, but let's see if the coin gets it wrong again today. And yeah, it's just for 3 weeks this coin has been so consistently wrong. If you were contrarian on the coin, you would have got it. You would have made some good money this week trading. But no less, pretty funny. Coin shows a bear. Well, hey, it's not the end of the day yet. Let's see what happens. 1774 overnight markets, 1760, which is kind of surprising. I mean, sorry, 1750 was a low and a high of 1775. We're sitting right in, right at the high end of that right now. So up $10. Remember, gold too didn't get whacked too much yesterday. I mean, it was down 1750 in that range. Silver really took the big hit, but that's so typical with silver. Also, we may have had some factors in there with the Chinese Evergrande incident and maybe a sell-off of metals in the Asian markets that exasperated that price downward. But again, for people that want to buy and people that understand these markets, not a big deal at all. It just, again, provided a good opportunity for physical buyers to buy the dips. Anybody that was trading options probably got whacked yesterday pretty good if they're on the long side, I think. Well, let's take a look at what silver's done overnight. 22.27 to 22.67, currently at 22.52. So, it's kind of holding steady here, up 23 cents from the yesterday's low. Platinum recovered quite well. It was sitting in that, I was wondering, well, God, will platinum do the sub 900 thing? I'd really be surprised if it did. Let me make a caveat here. it's still, I don't think we've seen our Lehman crisis here in this country. Now, maybe China's going through it. Maybe they'll contain it. Maybe it's not even a Lehman moment because China will handle it differently. However, China is going to be no different than our country, except they're going to be more visible with it. They're not going to hide it behind closed doors at Fed meetings. They're going to just come out and say, all right, we're limiting how much you can, we're going to put price controls on this, price controls on that. It's the CCP, it's the Communist Party that's going to do that, and they're dictators. They really are. So are our bankers and politicians, but they give us the illusion of freedom, the illusion of choice. But I digress here. And let's take a look at Palladium now. 1914, man. Palladium was, what the hell happened to Palladium? I have a sneaking suspicion, and now if I'm correct, I believe there's very little platinum used in cars, catalytic converters. I think catalytic converters primarily use Palladium. This could be just a tell of what's going on in the automotive market, the lack of use of Palladium. And remember, Palladium and platinum are controlled by the mobsters, the three mobsters, Canada, South Africans, and Russians. When it comes to a cartel, you know, the platinum or the white metals group cartel. Those are the three that control it. So take a look at the price on Palladium. Do you think it's cheap? I don't know. Let's just see what happens here. I think silver's cheap. I think platinum's really cheap. Is Palladium cheap? I don't know. Again, will it get back to the level once production of cars goes up? Probably. So probably not a bad buy at these levels. However, again, Palladium is not my expertise. Let's go into, there's that 90% stuff I was teasing you with. As I said, wait for a little bit here, and I'll show you how to turn this stuff into even more silver than you currently own just by doing a simple trade. And I'll tell you what to do the trade with as well. Currently, let's take a look at this too. Interestingly enough, gold again didn't get the wackadoodle too much. Looks like silver primarily took most of that whack. Currently, our gold to silver ratio is sitting at 78.8 to 1. So, you know, that's up quite a bit here. And we'll take a look at that chart for a little bit. However, I saw this. I've never really clicked on it before. It's called Trading the Gold and Silver Ratio with Investopedia. The problem I'm having with Investopedia right now, though, it eats up memory. The page just keeps flashing over and over. I don't know why. Maybe it's my computer. But let me click that real quick here, and let's talk about what Investopedia says about trading the gold and silver ratio. I'm going to just go over some key points. For hard asset enthusiasts, the gold-silver ratio is a common parlance. For the average investor, it represents an arcane metric that is anything but well known. The fact is that a substantial profit potential exists in some established strategies that rely on this ratio. Effectively, the gold-silver ratio represents the number of ounces. Okay, most of you know that. If you want to know what the gold and silver ratio is, just take the gold price and divide the silver price into it, and it'll tell you what the ratio is. Like I said, currently 78.8 to 1 to 1 right now when I use the last prices. Let's just take away the key takeaways, the key points of trading the gold and silver ratio. Investors use the gold-silver ratio to determine the relative value of silver to gold. I like that. I like that. And right now, I think that the gold to silver ratio is telling us a couple of things here, but probably. Let me say this before I get into this. I think the gold and silver ratio is telling us that either silver is too low or gold's too low, and I think it's more than likely silver is too low right now. So typically we're in that 68 to 1 ratio, and again, I'll get into the ratio chart here in the middle and show you where we're at now and where we typically are. Let's see. Investors who anticipate where the ratio is going to move can make a profit even if the price of the two metals fall or rise. Exactly, kind of what I just said right now. It's highly likely, in my opinion, that well, tough to say too. Tough to say with the environment in the background. But with this gold to silver ratio, I'm suspecting that silver is kind of too cheap, and it'll play catch up, and the ratio get back in the line before long. However, we're not in normal times, so let's see if that plays out. And that's, again, I think right now we're getting a tell that silver's a great buy. It's too cheap, and I don't think gold's too cheap. The gold to silver ratio is used to be set by governments for. See that page froze up there? There we go. Okay. The gold and silver ratio used to be set by governments for monetary stability, but now fluctuates. alternatives trading to go. Okay, I don't want to get into alternatives. I'm not suggesting any of you physical traders, you guys that buy and hold and physical bars and stuff, go out there and be a day trader. It's a good way to get really hammered bad unless you know what you're doing, like any other market. And I don't even get involved in the day-to-day trades. It's a casino to me. What is the gold and silver ratio? And here we go. Hang on one second. We already know what the gold and silver ratio is, and we know how it works here. And gold to silver ratio, oh, that's kind of interesting over time. Well, here, take a look. They've actually put the average line up here. Oh, geez, this page just drives me crazy. I love the website, but it's the only website on my thing that keeps flashing like this. Sorry about that. In fact, this page is kind of worthless what it's doing here. And let me just try to find a couple points here I was talking about earlier. Here's a quick overview of the history of this ratio. So this is where I was going to go real quick. 2020, for the year, the gold-silver ratio peaked at 114 to 1. I'll try to show you a graph on that if it doesn't keep flashing on my machine here. But last year, yeah, I saw an intraday spike of 120 to 1 with the gold-to-silver ratio last year. But apparently, I guess on the close, I'm not sure if they're using London or New York for that, but 114.1, which is really substantial. And when we were looking at in 2020, when I'm looking at that gold ratio, what do you think I'm thinking at the time? I'm thinking to myself, wow, either gold's way too high or silver's too cheap. Well, it turned out silver was too cheap because that's when silver made its big move, you know, from the teens, the mid-teens to the high 20s. So in 1991, when silver hit record lows, the ratio peaked at nearly 100. Now, this is counterintuitive to what you would think, what you just saw with 114 to 1. And you know what? I did not get a chance to see. I think this was the beginning of the bull markets in, let's see, 1991. No, it wasn't a 20-year bull market. I really can't explain this, so I'm not going to try. 1991, when silver hit record lows, the ratio peaked at nearly 100. I have to look at the data and the prices and what happened before that and after that to answer this one, but that's kind of an interesting point. I didn't know that. This I did know. 1980, at the time of the last great surge in gold, the ratio stood at about 15 to 1. Now, that's pretty incredible. That's like the natural ratio that they used to use in the old days. Like I said, we'll get to this if this video or this web page doesn't flash on me again. 1792 to 1834, the U.S. operated by metallic standard with there you go, with a fixed ratio of 15 to 1. Oddly enough, that's about the same ratio that you were trading in 1980. That's the Hunt brothers' time. And you know, I got to tell you something with the Hunt brothers. They went and cornered the market by buying up all the contracts on COMEX, demanding delivery with all these bullion banks, and the bullion banks basically stuck it up their rears. The Hunts did everything correctly. They just were about to beat the casino, and the casino took them down. So the silver market was genuinely a good. The Hunts weren't in the gold market, remember that. Why was gold so high? Gold was at a record high in 1980 as well, just as much as silver. Well, so were interest rates. Yesterday I made the mistake of saying Greenspan's interest rates during the Jimmy Carter time was actually Volcker, who was the guy that raised interest rates up to what? CDs were 8%. You know, home loans could be anywhere from 12% plus. What is it? The government home loans were as high as 12% fixed. I mean, think about that. So gold was record high. So we can't just look at silver. And but the Hunts saw markets rising in gold, and they knew silver would take it up as well. They also knew that the COMEX and the bullion banks were running a big sham. They had all these naked contracts they couldn't deliver on, and the Hunts took advantage of that. But then, you know, we've done videos on that. That's a whole different story. And I do digress again. 1834 to 1862, Congress then moved to change the ratio to 16 to 1. The Roman Empire, the ratio was set to about 12 to 1. So this is kind of interesting. What I am curious, which I've not been able to find, but I got to tell you, I didn't look too hard yet, and I should have, was what is the ratio? Look at this web page using, gosh, I love Investopedia, but man, it just sucks up a lot of memory. So let me move over to this page here that sucks up a lot of memory. Even worse is macro trends. But I was talking about the gold and silver ratio. I wonder what the ratio is scientifically in the earth. You know, do they know that? I think it's around 15 to 1 or 17 to 1 when I last heard. You know, what is actually, you know, if a scientist were to figure out, you know, how much gold is on the earth and how much, you know, in the earth, on the earth, and how much gold is on the earth as well, and then inside the earth, or silver, what that ratio would be. My understanding was always like 15 to 1, 17 to 1, somewhere in that range. But does anyone know what the geological ratio is? I'd be curious. Maybe I'll take a look. But if you do, put it in the comments down below. I appreciate that. Let's look at the gold to silver ratio 100-year chart. And this one's going to flash like hell. Love the charts, but for some reason I can't get this website to operate on my computer properly. It just sucks up too much memory. Sorry about that. Don't mean to tell you my woes, my computer woes. Maybe something I'm doing too. Here, let's close out BlackRock. Screw those guys. And let me just kind of increase that page a little bit. Maybe I can get away with it without this thing exploding on me. All right, so let's do the 5-year chart right here. And here's that 2020. Look, 114 to 1 ratio. And what happened at that time? Shortly thereafter, gold prices did not come down. Silver prices came up dramatically. And where was the price of gold at that time? Yeah, silver prices came up dramatically here. And if you take a look, we also have that point where silver, where is it? October, here we go. This period right here is when both gold and silver went down. Kind of strange little blip on the chart. And now we were back to our normal ratios. Our normal ratios, again, are between around the 65 to 1 rate, you know, for the last 30 years. Here, let me show you. I would say if you draw an average line, there it is right there. And if you saw on the last website we were looking at, Investopedia, they had that same line drawn right about there. So there's our average if you were to take all these. And there's, you know, far above average in the ratio, and then back down to this average. And here we are going up again. What does that mean? What does that mean right now with the rise in gold? Again, I think on the short-term basis, I think silver is too cheap right now. I can't see gold dropping substantially more. However, this Chinese layman moment, this Evergrande moment, could it spread? You kind of doubt it. You wouldn't think that that market would affect us so much here, and if it did, we already, you know, the writing's been on the wall for the Evergrande for quite some time, you know, for people that knew. Our banks here had to know, maybe even were instrumental, maybe we were even instrumental in pushing the Chinese into that layman moment for their own. This is a economic war that we have going on as well with China. Believe it or not, no one's really talking about it, but it's true. So here's our average line right here. So who's to say what's going to happen with the short term with this Evergrande thing? But no less, I don't think gold's too cheap. I think silver's too cheap right now. And once we get back to that 65 to 1, silver should follow gold. However, it could lead gold as well. Well, let's move, again, just my opinion, folks, and something to talk about. So let's take a look at Seeking Alpha. I got a subscription to this site. It's really cool. They got some good articles in here. This is Stuart Alsop, full-time investor and owner of Icon Economics. Silver sell-off, a bargain, or a coming commodity crash, maybe both. He kind of points out a couple things about the industrial uses in silver, but you know, the investment demand in silver is also quite an impressive thing too. And silver is not just used in automotive. Silver is used in all kinds of things, including the medical industry. So, you know, the idea that the usage of silver is just going to drop off the earth, you know, and drop off the map, I don't see it happening. I could see a slowdown in the use of silver a little bit, but not a complete stop in demand. It's too much widespread out there for so many things, so many products that we're not even aware of. The weakness in silver over the past few weeks has occurred despite relative stability in the gold price and the broad. Yeah, so he's pointing out the same thing. The gold price has kind of stayed consistent in that 1750 to 18 range, so didn't get monkey hammered as bad as silver, platinum, and everything. As a result of silver's recent underperformance, the metal is now trading around 25% below the level that would be expected on this long-term correlation. What that really means, and I think what Stuart is saying, I'm not sure if he is saying it, but it's 25% cheap right now. Again, good opportunity to buy the dip if you think silver's too cheap and gold's right where it should be. The average 12-month return for silver following periods where the metal has been 20% undervalued or more has been 18.3% compared to 3.5% in all periods. That's very, very interesting data there. The main risk is that we see a repeat of 2008 when silver was deeply undervalued relative to gold in the commodity complex, but the correlation was restored by a recession-led commodity price. What Stuart's talking about here is something I've talked about for a year and a half, and I think I talked about this last week a couple times, is that when we had our Lehman crisis in 2008, silver and gold got whacked. Silver got whacked even harder than gold. However, when it did get whacked really hard, you just couldn't buy at that price level. The physical supply just completely dried up. Premiums went absolutely insane, just as insane as they were with prices twice as high as they were then. And not only that, delivery times were insane. Eagles and all that stuff. Some people were quoting 2 months, 3 months out for silver eagles. And again, it was with silver at less than half this price. I mean, far less than half, a third of this price. We were having those supply issues and those demand issues. So, although this may not be the Lehman moment in China, and maybe it is, we don't have a lot to worry about until we have our Lehman moment here again. And once that happens, folks, look out. Every asset across the board is going to take a giant dump. And silver and gold will do the same thing. But will you be able to buy it then at that level? Probably not physical. I digress again. That's my favorite word today, digress. While such an event may keep silver depressed for a while longer by undermining industrial use, it would also likely further improve the long-term outlook for the metal as a store of value by further depressing real interest rates. Well, real interest rates is far higher than what most people think they are. That's why they keep talking about, well, if the Feds raise their rates, the economy is going to be better, and people want to get into treasuries or bonds because it'll pay more because gold pays no. That's what a bunch of bullshit that is. The truth is that I don't think the Feds can raise the rates high enough to be significant and even match up what the real rates are, much less even get par with real rates, much less get ahead of it. So that's just a total bullshit narrative, if you ask me. Let me move along here. The weakness in silver the past few weeks has occurred despite relative stability in the price of gold. Okay, that's kind of what we've been talking about here. And our silver, he's talking about silver being undervalued. Again, a good article. I'm going to suggest you read this. I believe that Seeking Alpha has. Let me just see if I can go back one, and there we go. I believe these are all articles you can read for free with Seeking Alpha, and if I can suggest, it's a great site to subscribe to. It's not expensive either, even if you can't read these for free. I would recommend a subscription to this site, especially if you deal in equities and stocks and bonds and other things too. They got a lot of good stuff here. Just my opinion. And no, they don't give me anything for saying this. I just tell it like I see it for myself. What's going on out there in ZH world? Well, mostly political stuff. Didn't see too many in economic things. What is going on here with Peter? What does Peter Schiff say? Here we go. The moment this morning report came out, gold and silver got hammered and the dollar got caught a bid. People are excited because they think, aha, the consumer. Yeah, Peter was making mention here that the reason that gold, hang on, got sold off yesterday, and I don't agree with this. I think it had more something to do with China than it had to do with the report of better retail sales than expected. I think Peter was looking at the retail sales and not really looking at the impact of this Evergrande deal. However, I could be wrong and he could be right, but I don't think better retail sales. I seldom disagree with Peter, too. He's one of my favorite guys out there to listen to. He's a really smart dude. Even if you disagree with people, sometimes you can still say they're very smart, and I think he is super smart. But I got to disagree with this. I don't think it had anything to do with the retail sales report is why gold was down. I think it has to do with monkey hammering and the Evergrande deal. But again, I've said it 10 times already. Sorry. And what is Peter says down here? People are excited because they think, aha, the consumer is strong, and therefore the Fed is going to tighten policy, which of course is complete nonsense, because even if the Fed were to tighten policy, they are going to do what they're going to, again, exactly what I just was talking about. The Fed is they can't do much at all. They can't raise rates meaningfully enough to make an impact or create, or above the real rates, actually. So, the other thing I thought about here too is Peter might be correct as well, because a lot of trading is done in algos. So, do companies that trade with algorithms and news, when news goes in, that they let computers, AI, do the trading. There are some probably AI traders out there, and it's possible that a combination of Evergrande, a combination of monkey hammering, and a combination of what Peter says here, better than normal retail sales, and a combination with the rising dollar could have caused it as well. There could be multiple reasons that caused yesterday's price down in gold and silver. And again, I always think that monkey hammering is part of that reason, no matter what day it is. So, gata.org. Not too much to talk about. I did see this article right here, and where is it? Yep, that's the newest article on gata.org. If you're new to my videos, I suggest you put gata.org on your reading list or on your bookmark bar, because they tell you who the casino, how the casino plays the game, who the casino players are, and how the casino can rig the game. Great stuff right here in the basics. Definitely put this on your bookmark bar and read more into it, and take a look at their articles once a week. New article by Hugo Salinas, who is the richest man in Mexico, or one of them. I think he owns a lot of silver mines too, so he might be slightly biased. So you think? Well, no less. You think he'd be in the know as well. Bad news for those interested in the price of gold and silver. Now, I got to tell you, I've read a few of Hugo's I read some of his stuff before. I agree with some of it. Sometimes I really truly believe that there's some kind of miscommunication and error in translation here. I'm not quite sure how to describe it, but a few articles I've seen from his, I'm just saying, well, what is he saying? So the bad news is there's no real prices of gold and silver available in the world today. Now, let's get his opinion. It is useless to follow the investment recommendations put forward, all in good faith by individuals such as Peter Schiff. That confuses me, because I don't see Peter Schiff being too far off from what Hugo Salinas talks about. So anyways, let me move on from here. The price presented by the media in our world are determined by a small group of individuals in London and New York. Now, I think Peter Schiff would agree with that. Maybe not. I don't know Peter's views on manipulation of precious metals. Maybe I should look that up. He doesn't talk about it much. This group decides each and every working day what the prices of gold and silver are to be that day. Now, we all agree with that. We can't disagree with you on this. That daily decision has nothing to do with market for these metals. The section of kitco.com devoted to comments regarding the markets for the precious metals is perhaps entertaining but otherwise worthless. Ooh, that's a slap across the face to Kitco. But hey, let me know what you think in the comment section. Some days the prices of these metals are allowed to rise and the hearts of gold and silver investors go pity-pat. But following that rise comes a collapse. Investors who purchased metals earlier in the day are now losers. They're only losers, Hugo, if they're day trading. You got to remember that, and I think he might say that below here. Then other days, the price of precious metals are falling, and investors rush to sell their stock of metal to avoid further loss. Again, he's talking about day traders here. Then it should be then suddenly, the price turns around and goes up a bit, but the investors have now liquidated all or part of their stock and cannot benefit from the rise. And what Hugo's talking about is day traders, people that day trade in gold. I don't know if Peter Schiff does. Maybe he does. Maybe that's why he mentioned Peter in this article. But Hugo's talking about day trading here. And as I've told my people many times, stay out of that. I mean, unless you know what you're doing, or you don't mind, not knowing what's the best horse in the race and just looking at the chart and trying to figure it out on your own, not having the experience, stay away from that market. Buy and hold. But let's move along in the article. The real purpose of the precious metal market today is to confuse the public. I cannot argue with that. Now, that is some wisdom in those words. This confusion as a goal of broadcasting fictitious prices of the precious metals has allowed the dollar to survive as long as it has, as the world's #1 currency. Ooh. There is only one way to profit the precious metals market. You buy at whatever the price is when you wish to buy and take possession of that metal you have purchased. That is a pretty heavy comment coming from a billionaire, okay? Very interesting. Now, remind you, he owns silver mines, so maybe he has an interest in telling us to buy the physical, but somebody's going to buy that silver regardless. So I don't know what vested interest he would have saying buy physical, but then again, he may be involved with some mints too. Take it for what it's worth. And Hugo goes on to say, you put your purchase away, shut up about it, and wait. I kind of like this. I'm liking this guy. You may die before the price of the metal you bought goes up and stays up. You know, I don't believe that necessarily, because I see cyclical markets in silver. I mean, if you look back over the last 30 years, we're never going to see $5 silver again. We're never going to see $10 silver again. So that's not necessarily true, Hugo. On the other hand, he says, if you're still breathing and the dollar has died and gone to hell, what you'll be able to purchase for 1 ounce of gold will prove to be the very greatest surprise of a patient life. Again, I think a lot of stuff is lost in translation here. Not whoever's doing his writing for him needs to do a little bit better job and elaborate on some of this stuff. But you know, I don't think the dollar is not going to die. It's not going to go away. It'll get reinvented or just become, you know, it'll take more and more dollars, hyperinflationary moment to buy stuff, or they'll just add another zero. $1 bills will become tens or something like that. Well, anyways, let's move along here. Interesting article by Hugo Salinas, and that was ngata.org. Not much to talk about on AIER, the American Institute for Economic Research. This is one of the very best websites out there with different opinions and narratives. If you like business and economics, this is like the place smart people to go to. Smart people go to read. And again, not too much I want to read here. And again, we'd be here a long time. Occasionally I will pick out an article here. However, my whole point of these videos is I've been doing this for, since 1977. I've been doing this a long darn time. So what I'm trying to do in these videos is create more business for myself locally, obviously. And I'm also trying to teach people stuff. So when they come in, they'll make a more educated purchase or sale. And that's much easier for me and my staff. So, you know, anyone out there, local coin stores or people listening, educate your peeps. It makes them better customers, and they appreciate it as well. So my point here is not to give you a fish, but to teach you how to fish. So that's why I like to show you sites like this and what I'm reading in the background. And, some of this may form my opinion. Not too much, again, to talk about here. Well, there was something I wanted to mention here. Where is it? That's none of your business. Okay. Anyways, I just wanted to share with, my reading material with this, and I would put this on your bookmark bar as well. Let's look at the Reddit group out there. I'm going to, once in a while I like to go out and take a look and see what's going out there, and let me just hit that button and see a refresh. And it looks like, anybody who start abusing you if you say anything against bullion banks are manipulated. Okay, not quite sure what that means. Looks like someone's showing their silver out there, and that's pretty cool. One of the only things I don't like about people showing their silver, if you have an anonymous, if nobody knows who you are, that's fine. I think you can post. Don't post anything with your name, your real name, or any address information, or anything that maybe even someone down the street that knows what the inside of your house looks like. Don't post that stuff online. Don't post your stuff online. It's a good security thing not to. Again, unless you're completely anonymous online, then you can post all your silver and gold stacks. But limit yourself here. It's the same thing with guns. I never understood why people would go online and give their real name and show all the guns they own and all the. I'm not worried about the government as much as I am with bad people. Coming to rob you. Wake up in the middle of the night with a gun to your head. And I know most of you think that can't happen, but hey, it happens even to us toughest guys. And all you can do is try to prevent it. That's the best way to stay out of trouble is prevention. And these are cool. These have been around a long time. Probably a cheap way to buy silver. I'm not quite sure. I know a lot of Mexican products are really expensive right now. Libertads are still, wow, they got to be at least $5 or more, $5 to $10 over spot. Hard to find too. What if I told you, I already told you, and you didn't listen? Keep stacking. I love the enthusiasm of the Wall Street people here. The Wall Street silver people. I really do. And the memes are really super cute. Not too much to kind of point out here. I was just looking for some questions or anything that I could answer on my video, kind of. Let's take a look down here. Not really. Oh, boy, that's a crazy ad. More shiny, more 5 ways to invest in silver. Oh, other videos as well. And let's see what the crooks pull today. All right. You know what I'll do in the future? I'm going to start going through the Wall Street silver site and look for questions out there, maybe something I can talk about real briefly. And let's move into yesterday's video. G-Boat, the greatest bubble of all time. Charles Hugh Smith, who writes a lot of stuff, has his own website, Political Economic. I got that name from him, G-Boat. I thought it was pretty cool. Just short for greatest bubble of all time. Give me 1 second, do a quick sip of coffee here. Alrighty, and let's take a look at yesterday's video and some questions, see if I can answer some. I'm going to kind of run through this fairly quick, folks, so forgive me if I miss your question or I missed acknowledging you. It's getting harder and harder to do, too, with the more comments that we're getting here, so sorry about that. And let me just blow that up, because I can't even see that well. There we go. Thank you for all the comments and people that like my videos. Hey, if you like my videos, like and subscribe and share them, please. I do appreciate that. Oh, Jeremy, you went to my friend's place. Yeah, my friend, I don't want to mention his name because I'm not trying to diss him, but yeah, that's overpriced, dude. I know him as a coin person, a really nice person, but I was unaware, I like to advise people to go someplace if I like the person, but no, I would say at $29.96 an ounce, man, you can't really go there. That's kind of a shame. Maybe he's just not a bullion dealer. I know him as a coin dealer, not a bullion dealer per se, but yeah, that is a little bit high given the prices yesterday. Of course, if that was a Silver Eagle you got offered right there, that's not too high. The problem right now is Silver Eagles are too high, but if that was a 1 ounce generic for $29.96, yeah, I can see why you don't want to go there. And my apology, but it never hurts to check. You just don't know. So nothing sad about that. Hey, you found out. Hey, you could have gone over there and you could have got a better deal. Not a big deal for me, and no worries there, Jeremy. I'm glad you're getting a better price, and nothing against my friend. Maybe he's just not a bullion dealer, so I should have called and asked before I advised it. Joey from Seattle. Yes, I wish I were Mr. Limpet. Don Knotts. God, that guy was funny. Loved him in what was it, Andy Griffith show. So grew up watching that. That was one of my favorite shows as a kid. Had good morals. Thanks for watching, Joey. Brian says the greatest bubble is the next one. Yeah, I agree with you. The greatest bubble of all time. We're living it right now. We are living in the greatest bubble of all time. Every asset across the board is just insane. So anyone that doesn't think we're living in the greatest bubble of all time is delusional. And it's all because of cheap, easy, free money. Well, free if you're connected. Look, I mean, video games going for, hundreds of thousands of dollars. Your freaking video games from, I'm sorry, I shouldn't say that. I'm not saying anything bad about video games. I mean, there's a collector, but NFTs of a picture or some crappy piece of art. An NFT sells in a Sotheby's auction for insane money. What the hell was it? 25 million, whatever it was. It was too much if it was over $2.50. Look, money is just looking for places to go. And you can call that Gresham's Law, more or less. Gresham's Law states that bad money will drive out, or good money will drive out bad money, which means that in times of financial duress well, more or less what it means. Say, for example, during 1960s, the constitutional silver was made out of 90%. And then what happened after the government phased out 90%? They made copper coins that had no silver in them whatsoever. Quarters from 1965 have no silver whatsoever in them, okay? So what did people do? People started hoarding the silver quarters. That's why we got so much 90% out there. And they started keeping those, and they were spending the bad money, which is the copper, nickel, crap money that we have today, the fiat money, not based on anything. So basically, good money drives out bad money. I get confused with that. Who drives out who? However, in an inflationary time, in a hyperinflationary environment, the opposite is supposed to happen. But, I'll talk about Gresham's Law again maybe this week, or a show coming up here. I'll label it Gresham's Law or something like that, so you know. Boy, I digress again. Hey, digress. I think I use it a half a dozen times. Have a drink every time I say the word digress. So I did it again. I drink myself. Coffee, though. Wait a minute says it's heard so often that it's been 10 years warning and nothing happens because it's been 10 years of this bubble forming larger proportions. That's exactly true, sir. People there that are saying, well, gold and silver hasn't done anything. Well, that's because this bubble just continues to grow around ridiculous investment vehicles, if you ask me. A lot of them, even stocks and bonds, which are equities, which I kind of have a lot of respect for. I mean, why not? Have no fundamentals. What is Apple? Why is Apple so high? What the hell do they do? Apple, creates the same old crappy phone with a better camera each year. What is other than the fact that Apple people keep investing money into Apple, and Apple keeps buying their own stock back, and Apple keeps stockpiling cash. That's the only reason Apple's a successful company is they stockpile cash. All that money looking for a place to go. No fundamentals whatsoever. I'm not going to say it, but I'm going to have a sip here anyway. It's definitely a bull. My coin's been a little bit off there, Last Living Cowboy. But if you did the opposite of my coin for the last 2 weeks, you would hit the market correctly every time. Go figure. Guy, hey, thanks, man. Appreciate all the nice compliments there. When it comes to coin dealers and local coin dealers, I know some of you don't live in my area, and I really can't do anything with you because we're a brick and mortar. We only deal face to face. We don't do online stuff or over the phone. But your local dealer might be cantankerous. But however, I may do a little video on how to chum up with your local dealer. I think I'm going to do that. How to make nice with the cantankerous local dealer and get the prices you need to get. I'll do a video on that. Maybe I can enlighten some folks. Thanks for watching, Guy. I appreciate it. Linda says, I love the fish too, man. This is my favorite part of the morning is turning on the fish and having a sip of coffee. It's very relaxing. Thanks for watching, Linda. Yes, sir, Jeff. It has. Yeah, but it's been accurate with it. My coin has been so accurate with inaccuracy. It's been. Does that make sense? Thanks for watching. Good for you, Cud. I appreciate hearing that. 26, that's awesome. Yep, your comment's showing up, Tom, so not yet. They haven't banned you yet. Silver Lou says, yeah, I feel it's something coming down the pike. I do too. And no bubble in silver. Yeah, I visited my icon and what you have, and I forgot. Oh, okay. Anyways, I forget what the hell I was going with this. Me too. I do that all the time, sir. Thanks, Vance. Appreciate it. You made me feel normal there. I forget where I'm going with things often. You can hear it in my videos, unscripted videos. I can't believe I can talk this long either, so you probably can. I mean, you can probably believe that I can talk this long. Linda, what do you think about 401k? Then go to Fidelity IRA. I don't know anything about Linda. I'm not qualified to respond to that, quite frankly. I'm not a fan of anything you can't actually physically. When it comes to gold and silver, the beauty of it, to me, is no third-party risk. And no third-party risk means that you physically hold it on your own. You don't have your grandma holding it. You don't have a company holding it. You don't have the president holding it. Whatever. You hold it on your own. So I can't tell you about that stuff. It's not my expertise. Thanks for watching again. Beware of extraordinary popular delusions and the madness of crowd coming to a theater near you. Yeah, unfortunately, that might be true. Hey, Mike, what's up? Black Swan Evergrande has been falling 4 straight years. Yeah, that's true, Albert. Absolutely. Everyone knows the company's bankrupted. And it brings up a good point. Maybe, I believe that there's economic warfare going on without a doubt between China, United States, Europe. It's behind the scenes. They don't really openly say it. China's not afraid of openly saying much. But they have come out quite a few times and saying the United States has declared an economic war against China, and I believe we have. But it goes both ways. Trust me, there's one going both ways. And maybe U.S. banks and politicians here and covert agencies, et cetera, that all work together, all part of the same team. Maybe it's been a conspired effort to force a layman moment on China. And if that happens to carry over to the rest of the world, hey, China's made a great scapegoat as far as that goes, and it would be true. It started in China. How many times have you heard that? So maybe this layman moment for Evergrande is the start of the worldwide economic collapse. Who knows? We'll see what happens. Black Swan, I don't know. Gosh, I'm not privy to that information. Thanks, Albert. Appreciate your comment. Do you think the Chinese market problems with short-term dropping metals prices after a bit cause metal? Yeah, I do. I kind of think, as I said right now, that either gold's too high or silver's too cheap. And if I would pick between the two, I'd say silver's too cheap right now. But no, that's based on the ratios, as I talked about earlier. But no less, we are in a strange, odd time. You can't just go by what I just said, even though I've seen that work most of the time. Thanks for watching. Jersey, Rider, Gold and Silver 24-hour charts were flat. Yeah, they were up today. Yesterday, it was good. It was flat yesterday. Again, I'd rather see that than it just continuing to fall, I guess. I don't know. I don't know how I feel about falling prices. I like them because I like the opportunity to buy at a lower level, but you know, no less. You get tired of seeing the monkey hammering. Why do people only buy high? I always wait till people hate it and then I load up. Same with stocks. Hey, that's, you know, buying blood in the streets. Lexi May, agree 100%, you know, buy low, sell high, that's the ideal. But with precious metals, I think Hugo said it best, just buy, shut up, and put it away. You will prevail. Well, that's really about it for this. Oh, guess what I was going to tell you about? I made you wait so long. 90% right now. Well, best deals out there on silver or anything that you can pay less than $4 per ounce. But let me get to the 90% best deal thing here. The buy prices on 90% right now are just crazy. Don't buy it. It's overpriced, folks. The dealer wholesale buy prices is ridiculously high right now. It's so high, in fact, that I would, and if I can still do it today and I can get the supply, I would do a trade where I would trade you your silver coins for more silver ounces of 999. And again, what we're doing here is we're taking advantage of the premium, the differences in premium right now. If you can trade your 90% silver coins to a local dealer, you're going to have to find a good local coin store that doesn't mind making a profit and is not looking to make a killing too. So if you can find a good local coin store to trade your 90% coins in and get 100-ounce bars back in trade, you can end up with more silver than you started with. I've done this with Silver Eagles, and by the way, you can still do it with Silver Eagles. They're overpriced. You can still make a trade with Silver Eagles and get a decent premium and buy 100-ounce bars and get more silver for your money, or get the same amount of silver and money back in your pocket. Great trade if you can find the right local dealer to do it with. Again, that's my opinion here, and that's what I'm doing here. So my local customers, you want to do a trade like that, give me a call. If I can still do it, I will. What are the best deals out there? So anything below $4 per ounce for silver, which will not be 90%. 90% is ridiculous now. Don't buy it, folks. Like I said, don't buy Silver Eagles. Love both of those products, just overpriced. And I'll always tell you what the best deal is. It doesn't hurt me. I'm making a fixed amount. You know, I make a fixed amount per ounce. So it doesn't hurt me to tell my customers. In fact, it's good for me and other local dealers to tell the customers what the best deal is and don't try to load them into a bunch of shit, overpriced. I mean, not crap, but load them into overpriced premium materials. No one should do that. And as you know, I advertise to beat APMEX, JM, and SD bullion out there. And it's easy for me to do as a local coin store with low overhead because I have good access to the products. I also buy over the counter as well, so I can avoid some of that dealer spread too. But meanwhile, I advise you to check with your local dealers, and I know some of them are cantankerous, but if you can work with one, you'll get a better deal that way. And just explain to them. Again, I'm going to do a show just on dealers, how to chum up your dealer. You know, bring them some chocolates and some coffee or maybe some bourbon or whatever he's drinking in the day. I'm going to do a cool show like that down the road. As far as gold, best deals out there are still 1-ounce bars. You know, you can't beat the price on them. I like them. Krugerrands are a little tougher to get right now. I think there's a slight delay on deliveries on KRs out there. If you can find them, that's the next best deal at spot plus 85 or less. And maples would be next after that, right in that similar range. But again, bars seem to be the best deal out there right now. Stay away from Gold Eagles and any products priced over $100 per ounce. Just too much money. You know, for a price of a Gold Eagle, you can buy a Krugerrand and probably 1 ounce of silver for the same price you'd pay for a Gold Eagle. So, you know, don't pay those big premiums. Buy something cool with it, or at least buy lunch. That's it. Hey, we got to the end of the show. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime between the hours of 10 and 4, Mondays through Fridays. Happy to help you out with whatever you need. Hey, thanks again for watching. Make sure you hit that like and subscribe button, and that's it. Just in time, too, because oh, my tongue is starting to get tied. All right, folks. Thanks again. Have a great day. Talk to you tomorrow.